Hello, I'm Martin Smith and welcome to this week's UFXBank Week in Review. Today I'll be covering some of the major financial events of the past week and how they impact the global currency markets. But before I begin with the headlines of the week, let's look at last week's rises and fallers. The euro-dollar traded mixed throughout the week. The pair lost 0.66% and was last trading at 140.87. The British pound also had a mixed performance against the greenback, making a fall of 1.18% to close at 160.40. The dollar-yen recovered this week, gaining 0.93% and was last seen trading at 81.32. Tough times, however, for the US-Canadian dollar. This continues. A lot of back and forth this week left the pair with very little changing. Overall, the pair dropped 0.30% and was last seen trading at 0.9811. Taking a look at commodities now, gold had a decent week, gaining 0.75% and closing at just under $1,429 per ounce. Meanwhile, April crude orders gained 0.05% to close at $105.55 a barrel on Friday. Now, in the news this week, JP Chase has added a new index for global foreign exchange volatility that actually tracks the options on currencies of major and developing nations. JP, the world's sixth largest currency trader, also carries two other indexes focused on the foreign exchange market. One follows implied volatility on major currencies and the other on emerging market currencies. The announced global index is intended to complement the other two. Currently, Deutsche Bank AG is the largest currency trader in the market, so this could be JP attempt to make a push on the competition. According to Thomson Reuters and the University of Michigan's final index of consumer sentiment, consumer inflation prospects in the US increased in March to the highest level since August 2008. Consumers are expecting inflation to be 3.2% in the coming 5 years, in comparison to 2.9% last month. Warren Buffett is currently traveling in India this week for a review of Berkshire Hathaway's operations and scouting opportunities. During the trip, he made recommendations against buying long-term fixed dollar investments. Buffett made clear that in his opinion, the US dollar's purchasing power will likely decline, and he also recommended avoiding long-term fixed income bets in US dollars because of the currency's likely decline. In Europe, European Union leaders cut the startup capital for the future Euro emergency and aid mechanism after German demands to make smaller upfront payments stoked fresh concerns about Europe's effort to quell the debt crisis. Amid fears that Portugal may be the next victim to succumb to the debt crisis, European leaders bowed to German Chancellor Angela Merkel's increasing calls to lower the funds paid in capital to 16 billion euros, less than the 40 billion euros foreseen in last Monday's meeting. European Union leaders failed, however, to solidify a permanent bailout mechanism, and as a result, the euro fell against the dollar from its highest level in almost 4 months. Though they sound fairly optimistic that no country after Portugal will likely need a bailout, it seems too early to say that for sure, and I personally don't see any justification for the euro's price to be even this high. I think that this is an indicator of the market having fairly good risk appetite, despite the turmoil going on. In other news now, Russia's central bank kept its benchmark interest rate unchanged after a surprise increase in February, opting to raise bank reserve requirements for a fourth straight month, as a stronger ruble tamed price growth. It would seem that the central banks in Eastern Europe and other emerging markets are pausing rate increases to sustain an economic recovery. I believe that this decision was made based on continued high inflation expectations and risks to the stability of economic growth. Overall, I think the unstable situation on global financial and commodity markets will likely have a mixed effect on the Russian economy. Well, that's all we have time for this week. We hope you enjoyed our weekly review, and we will join us next week at the same time. Until then, be sure to visit us at UFXBank.com for simple, safe, secure trading. I should also add you can follow us on Twitter and Facebook. And to submit questions to our weekly broadcasts, please email your questions to me, that's Martin Smith, at askthebroker@UFXBank.com. That's askthebroker@UFXBank.com. So that from UFXBank, I'm Martin Smith, and good luck and happy trading.